Wow, what a wild day in crypto, the final day of July. We have Richard Hart getting sued by the SEC. We have Coinbase going after the Financial Times in their report and what they omitted on their reporting from Coinbase versus SEC. And then we have Curve Finance getting hacked for millions of dollars. And you're going to find out my take on Richard Hart. When Lambo, I'm such a degen. Welcome to Degenny from the blockchain, where we defy logic. And in this episode, we're going through another crazy day in crypto news. The Curve Finance stuff happened over the weekend, but it was covered mainly on Monday. And we have, HEX, PulseChain, PulseX, Coinbase versus SEC, new information that came out there, and Curve getting hacked. So let's get right into it. From Reuters, we have US SEC says HEX crypto founder defrauded investors, spent money on Enigma Diamond. And real quick, the U.S. Securities and Exchange Commission has charged online entrepreneur Richard Hart. Online entrepreneur, I'm telling you, the terminology that some of these articles and news outlets come up with is hilarious. But Richard Hart, with illegally raising more than $1 billion in 3 unregistered cryptocurrency offerings and defrauding investors out of $12.1 million to buy luxuries, including the world's largest black diamond. In a complaint filed on Monday in Brooklyn federal court, the SEC and Hart, also known as Richard Schuler, touted his HEX token, PulseX asset trading platform, and PulseChain asset network on YouTube and other websites as pathways to grandiose wealth. And there's more information in detail in this article, and of course in the filing, these details of buying the 555 carat diamond and luxury cars and all that. But this, of course, here we know HEX was capable of 38% annual returns and said to be built on the highest appreciating asset that has ever existed in the history of man. Look, you can say a lot about Richard Hart, you can say a lot about HEX and PulseChain and all that. But as we've learned in the XRP case, the Ripple case versus the SEC, is that XRP itself is not a security, the token itself. And you can argue that crypto tokens themselves are not securities. The packaging of them at various points in their existence can be securities and probably are. And I think for the most part, the way that you see, 38% annual returns could possibly be a security investment contract, right? So not only that, but HEX itself is not a security. I think we understand that. So that's great. Like, this is not against HEX or any of the tokens really. It's about Richard Hart defrauding investors. That's what the SEC mainly is going after. And the way he packaged up some of the wording and some of the maybe promises is what really, I believe, is what the SEC is saying is defrauding investors and unregistered security, offerings. So, but say what you want about Richard Hart buying, expensive diamonds and buying expensive cars and things like that. Anybody can do what they want with their money, but if it is proven that he used basically these sacrificial deposits, to buy these things, that would be defrauding investors, right? And you can say that the 38% annual return, we've seen Anchor Protocol for 20% go down. There was a protocol I was in called Freeway, which I still am, but as soon as deposits or withdrawals go active again, I'm going to take my money out and put it elsewhere in crypto. But that was offering up to 43%. So these very high, promises in return are very suspect, very sus. So, 38 annual return. And if you stake, I believe you have to lock up your token for like 17 or 18 years. It's pretty crazy. So, correct me if I'm wrong down below, but I believe that's what it is in some of my conversations with some Hexicans. But the token itself probably will survive, because there's a pretty strong community there, and it's not a security. I don't think the SEC can come after the actual token, but he can slap a fine on Richard. They can slap a fine on Richard Hart for sure. So secondly, the SEC asked Coinbase to halt trading in everything except Bitcoin, says the CEO, Brian Armstrong. This is from the Financial Times, and giving more detail on Coinbase versus SEC. The request would have meant the end of the crypto industry in the US, according to Brian Armstrong. And you could say that is probably true. So the fact that Coinbase, let's read a little bit here. The US Securities and Exchange Commission asked Coinbase to halt trading in all cryptocurrencies other than Bitcoin prior to suing the exchange in a sign of the agency's intent to assert regulatory authority over a broader slice of the market. Coinbase chief executive Brian Armstrong told the Financial Times that the SEC made the recommendation before launching legal action against the NASDAQ-listed company last month for failing to register as a broker. The SEC's case identified 13 most lightly traded cryptocurrencies on Coinbase's platform as securities, asserting that by offering them to customers, the exchange fell under their regulators' remit, blah, 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 blah. But prior to Coinbase, delist every one of the more than 200 tokens offered, section. Okay, yeah. So, okay, the quote. They came back to us and they said, we believe every asset other than Bitcoin is a security, Armstrong said of the SEC. And we said, well, how are you coming to that conclusion? Because that's not our interpretation of the law. And they said, we're not going to explain it to you. You need to delist every asset other than Bitcoin. So if Coinbase agreed, Coinbase would basically go down or have to take their business elsewhere. You would assume Gemini, Kraken, and any other US crypto exchange would have to do the same thing. So, quote, we really didn't have a choice at that point. Delisting every asset other than Bitcoin, which, by the way, is not what the law says, would have essentially meant the end of the crypto industry in the United States. It kind of made it an easy choice. Let's go to court and find out what the court says. So that's pretty cool. Brian Armstrong has our back, but more on this in a minute, and that's right now. Our next story takes us to Curve Finance. This is from the Bitcoinist, and it says Curve DAO tokens suffer millions in hack ahead of white hat rescue bid. This is pretty crazy. Curve DAO faced a significant setback as millions of Curve tokens were pilfered just moments before a white hat rescue operation aimed at securing the funds, as revealed by blockchain data and Curve contributor Banteg. According to a report, approximately 7 million Curve tokens and $14 million worth of wrapped ETH were lost during the exploit. The breach occurred within the Curve ETH pool on Curve Finance, a prominent decentralized exchange renowned for its streamlined stablecoin trading capabilities. Wow. I mean, yeah, that again normally would be a lead story, but we just have so much explosive news, and it's a bear market, folks. I would still say we're in a bear market. I know it's an accumulation phase, but until the Bitcoin halving, really, I don't think we're in a bull market. Bull markets are where you are taking profits every day because your token is pumping 30%, then 50%, then 30% again, and it's just crazy, right? You just have these massive, massive days, and it only lasts months, really. So that's the bull market to me. This is just a big accumulation bear phase here. But that's pretty crazy. But what caught my eye was this scroll right above the artwork here in the front page. It says, breaking news, Coinbase hits back at Financial Times, claims important context omitted in SEC trading halt order story. So let's click on that and see what we have. Coinbase hits back at Financial Times, claims important. Yep, just read that. So here we go. This was 5 hours. So this was like maybe 5 to 8 hours after the original story came out. So according to crypto news outlet DL News, there is more about Coinbase and its interaction with the US Securities and Exchange Commission. The reports about the interaction added animosity towards the regulator from the crypto community. That's the reports from the Financial Times. But Coinbase clears the record, ? As Bitcoinist reported earlier, Coinbase allegedly received an order from the SEC to pause trading from all of its trading pairs with cryptocurrencies except for Bitcoin. In an interview with the Financial Times, the crypto exchange, Brian Armstrong, stated, they came back at us and they said, we believe every other asset than Bitcoin is a security. we just went through this, so we can move on. Thus, the crypto community's extreme reaction confirmed the SEC's approach to the nascent industry and its stand on cryptocurrencies to erase them all but Bitcoin. Wow. Now DL News added critical information. A Coinbase spokesperson classified the Financial Times story as an inaccurate representation of the facts. In the editing process, Financial Times appears to have left out important context regarding our conversations with the SEC, the spokesperson stated. Furthermore, the crypto news outlet received the following statement from the U.S. financial regulator. SEC staff does not ask companies to delist crypto assets. In the course of an investigation, the staff may share its own view as to what conduct may raise questions for the Commission under the securities laws. In the controversial Financial Times interview, Armstrong claimed that complying with the alleged SEC order would have essentially meant the end of the crypto industry in the United States and expressed his desire to go to court and legally fight the SEC on its stand on the nascent industry. However, the Financial Times interview might lose credibility if the recent report holds. However, as of this writing, there is no official statement from the actors involved. So, what I get out of this is this omission here, that the SEC staff does not ask companies to delist crypto assets. So, yep. And they said, we're not going to explain it to you. You need to delist every asset other than Bitcoin. So the report is saying that Brian Armstrong is saying that the SEC told them to delist every asset other than Bitcoin. But one of the omissions that Coinbase is also saying that Financial Times did not include or changed or something's fishy here, is that SEC staff does not ask companies to delist crypto assets. So again, we don't have clarity on even the reporting here. Be very careful in what you read and hear. I don't know if this is true or not. We just don't know until Brian Armstrong maybe just comes on a little Twitter space or does a video on what actually was said. So yeah, interesting stuff. But getting back to real quickly, Richard Hart being sued by the SEC, you know, it's mainly about Richard Hart and his flamboyancy and his allegedness that he is buying all these expensive things with the funds that he received when he said, we're the best chain in crypto. So it's not the three tokens associated with Richard Hart that are getting sued. It's Richard Hart basically. I heard from some people on YouTube that I hear that there is no HEX Foundation or anything like that. It's Richard Hart who is getting sued. Okay, and if you see PulseX, I mean, it looks like a meme coin, down 34%. We look at PulseChain. That's down 38%. It looks like a meme coin too. And then you go to HEX and it's below a cent, down 28%. And look right here, there's a note. Due to the price difference on PulseChain, HEX PulseChain is tracked separately to avoid confusion. Look, the fact that you have to track things separately to avoid confusion, and the fact that there is so much confusion at all in this whole thing around HEX and Richard Hart and PulseChain is the reason I'm not in HEX. It is just so unclear really what's going on. If it is true that you have to lock up your coins for more than a decade, such a long time, I just don't see why anybody would do that. And you might say, well, you do that in your 401k. And you're right, you do, which is why I don't contribute to my 401k anymore. Absolutely not. As soon as I realized what a scam that was, I certainly stopped contributing to that. If you want to do the employer match, I guess, go get that free money, that's fine. But in the long run, 30 years, depending on where you are in your career and when you're going to retire, over time, over those 30 years, I guess it matters. But what you can do with that right now in your own possession is so much better, as long as you're educated in the space. So, Yeah, so much stuff coming down. I actually have something from a hexagon in Telegram that I have to show you. Well, I can't find it. I'm sorry. It was just somebody who messaged me because we're in a separate project, and he's saying that one is a scam now. And he then tooted HEX to me for I don't know what reason. So, and then when I pressed him on like locking your funds up for years and years and years, he's like, it's going to be worth it. It's going to be worth it. So I just think that was another ploy by the Richard Hart hexagons and the minions he has on YouTube and elsewhere to push Hex and push PulseChain. So yeah, just there's way too many cringy things going on with Hex. The fact that Richard Hart is sued by the SEC just says something. It's just a bad light, right? And it could take years for a settlement. You just never know. But for somebody who's so out there, it looks like a stain. Even if it's not, just it looks like a stain, right? And the fact that there are 3 tokens related to this project that all look like meme coins just does not scream security to me. Like it doesn't scream, good project to me. I don't know. Does anybody else feel that? And just the fact that you have to question so many things, and the fact that the Hex website is just like littered with questions like, how do I know Hex is not a scam? Are my funds safe? These type of things. Why would you have to ask those questions? I mean, that alone just seems fishy to me. And this could be the greatest project in the world, but there are hundreds of crypto to put money in, and a lot of them feel safer than Hex, for example. So that's simply my reasoning for not having any Hex, not even looking into the project further than what's on the surface, because when there's so many questions on the surface, I don't need to dive deep really to see what's going on down there. You get a sense, an idea of what's actually happening. And again, I just don't want to lock up my funds for years and years and years. Simple as that. So let me know your thoughts on this wild day in crypto. Leave your comments down below. I'd love to read them. Always do your own research, because this is not financial advice. It's just my blockchain reaction. Thank you for watching. Hey, thank you for watching to the very end. And before you go, please subscribe to the channel, crank up that like button, drop a comment, and share the video. If you want to join me on the VEUIT platform, the Web3 streaming platform, I'm going to migrate all my content over there and create new content on the blockchain. My referral link is in the description below.